general into special journal. Special journal it is where you post several books or account into separate account. Like say sales book, we have something like purchase book, we have a cash book, we have sales book. You know, when we're talking about purchase book, that means any transaction that relates to purchases must be posted into special journal. Any sales transaction must not be posted into it, unlike that of a general journal. Likewise, we have a cash book. You know, we can post anything that relates to cash. Any transaction that you make that is cash must be posted into what cash book. Let me remind you that anything that has to, when we are preparing cash book, it is only fitting to the transaction that you made, which is made in cash, not on credit. So, but on purchase book is just a general journal where you post those purchases you make on credit, and likewise the sales book where you post all sales that you make on credit basis, and that is the difference between those books. So special journal can fit into different book like a purchase day book, cash book, and sales. So you don't record any items into special journal. The journal, the items which they relate, that is where you post it to cash book. What is a cash book? What is the meaning of a cash book? Cash book is a book used for recording receipt and payment of money in cash or check. That is cash book is very important, very important, in the sense that it helps you to record. You know, in a cash book side, it has receipt and the payment. And don't forget, our double entry principle is still intact. Any account that you want to prepare must comply with the double entry principles, and that is why before we could start tackling all those topics, we discuss double entry principles, because that is the fundamental of accounting, and if you get that, it will cause a kind of disagreement in your account. So now we're talking about a cash book where it has a receipt side and we have a payment side. That means the same thing in the double entry principle, that anything that comes in, anything that you receive, it must be on the receipt side, and any money that goes out from your account must be on the payment side. Note it, cash, any item that has to do with cash. You don't record any items that is any transaction that is done on credit side, that is done on credit, that is when you make a transaction on credit, you don't record it in the cash book. So it is only meant for any receipts and payments that we make in cash or checks. Now, what are the uses of cash book? Why do we use cash book? You know, everything that, or anything that has to do with any account must have the uses. Because if it doesn't have uses, then there is no need of applying it. So, uses of a cash book. Number one, cash book performs the functions of subsidiary book. And that is why we have different types of subsidiary book. We have different types of, under subsidiary we have a cash book, we have sales journal, we have purchase journal, we have return inward journal, and we have a return outward journal. So it performs the work of cash book. It performs the functions of a subsidiary book, because cash book also is part of a subsidiary book. Then the second one is it also performs the functions of ledger. That's the other use of cash book, because if there is no cash book, there is no ledger. It is all those items that you have posted to cash book, we now transfer them into ledger, from ledger to the trial balance. So any items or any account has their own function. So it used to perform ledger, because without posting any items in the cash book, then it will not have its own ledger. And when we are preparing ledger, we are complying with the double entry principles. Now the third one is balancing of cash and bank can be obtained at a glance. You know, with the help of cash, you will know the balance of cash in your hand. I mean, when you are making a transaction on the debit side or credit side, when money is coming in, when money, if CASHBOOK is just to monitor the cash, just to know the amount that you paid out and the amount that coming. So you know the balances of your cash at the end of the month. It might be on the month. We prepare CASHBOOK on the monthly basis. So you know the balances of your cash and at a glance after CASHBOOK has been prepared. Then what are the CASHBOOK, type of CASHBOOK? Now, as CASHBOOK is, we have different type of CASHBOOK. Number one, we have a single column CASHBOOK. The second one is that we have a two or double column. You can call it two, or you can call it a double column CASHBOOK. The third one is a three column CASHBOOK, and the last one is a petty CASHBOOK. We'll be taking it simultaneously, one after the other. Single column CASHBOOK. What is a single column CASHBOOK? This is the book which is used for recording money received and money paid. That is in just in one single account. So that's what single entry is there. When you make account in you recording when you receive and pay it. So we're talking about a single column CASHBOOK. And these are the formats. Under it we have a debit side. Don't forget our double entry principle, debit side and the credit side. This is the format. We have a date, we have a particular folio, we have amount, and the credit side we also have the same as we have it in a debit side, which is a date, particular, folio, and amount. Then let's go to illustration. We talk about it is used to prepare receipt and payment. Let us now use the examples, illustrate how to post our single column CASHBOOK. Looking at the question given, we have they said enter the following transaction into single CASHBOOK of Olaide. So now don't forget our format. That is the format that we are going to use in preparing our single column CASHBOOK. Then number one, we have a cash in hand, January 1. We have a July 3, cash to caller, and so many things. So now let us now prepare it. Now the first thing is we will write our format. This is CASHBOOK. Then debit and credit. Let me give you a tip on how to know the receipt and payment. This is the receipt side, and this is the payment side. So that also can help you. Going by the format, we have a date, we have particulars, we have a folio, and we have amount. Then on the credit side, we have date, we have particulars, we have folio, and so this is the format. Then we want to do the illustration. So now January 1 said cash in hand 1,500 naira, and the cash in hand must be July. That is the balance. We call it balance BD, which is the balance brought down from the closing balance of the CASHBOOK. When we bring into the following month, then it becomes balance BD. That's why we have a cash in hand, which is 1,500. Then January 3, cash to caller. This is telling us that we pay a cash to caller, and we show that we pay some account into caller's account. So the money is what is going out. So we it has to be posted in the credit side. Date is July 3. We have a particular will be color. How much? 250 naira. That is that. Then July 5, cash sales. You make a sales. You know, when you make a sales and you receive cash, then that means you are receiving what? Money. You know, when you make a sales, you collect money. So it has to be on the what? Receipt side. So that is the July. We have July 5. We have sales. Sales, which is 500 naira. Then the fourth one is cash purchases. When you purchase, that means something is coming out from your cash. You know, we have the receipt side and payment side. When you make purchases, then you pay money out in order to collect the goods. So the money is going out from the cash book. So July 5, we have cash purchases, which is 750 naira. Then the next one is bought stationery. Stationery is an expensive. When you bought stationery, you pay money from the cash. So that one is going out. Money is going out from the cash book. That is July 7. You represent the particular with stationery. Then how much is that? Is 50 naira. Then July 9, paid insurance. Insurance is also part of expenses. When you pay insurance, money move out from the cash book, which that means you pay money to the insurance company. So that one is